What is going on, YouTube Nation? This is Darth Dividend. And if you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I added a real estate investment trust to my M1 Finance dividend portfolio. Actually got rid of RA Brookfield Real Assets Income Fund. I'm going to throw that in my Etrade dividend portfolio. It just really, on my M1 Finance dividend portfolio, I want stocks, and I changed my philosophy. I really want stocks that usually increase their dividends, especially real estate investment trusts. So that's why I got Agree Realty Corporation up there, and that's why they have changed themselves to a monthly dividend stock, and they are slowly increasing their monthly dividends. So in the long run, I'm going to get a better bang for my buck. It's going to be a little bit more expensive, but Brookfield Real Assets Income Fund can be on my E-Trade dividend portfolio, and I can just reinvest and reinvest and reinvest, and then kind of like make up to $100 a month. That could be a goal for me. But right now, I got to focus on the real estate sector. A lot of these rates are down and they are increasing their dividends over time. So I'm going to show you this stock. I really want to show you the potential of this stock and why I added this stock to my M1 Finance dividend portfolio. Really cheap one. It's a good one. It has a very strong portfolio. It's worth billions of dollars. And we're going to check this out right now. So that stock would be Medical Properties Trust. So I have Omega Health Investors, National Health Investors, but I also added Medical Properties Trust. And I'll show you in a little bit why I picked this stock and why I am going to be long in this stock. Okay. So first of all, Medical Properties Trust. Okay. This stock is hot. It revenue appears to be up to $1 billion, and people are getting sicker and medical buildings are in demand. So in the past 5 years against the S&P, little wishy-washy here and there. Remember, real estate took a huge blow with this pandemic. So this is really huge for people who are investors, specifically with real estate investment trusts or hitting the financial sector, because when the financial sector took a huge hit or blow, during the pandemic, and look at even the when there was a recession hit, how bad real estate investment trusts and financial stocks like banks took a huge nosedive, and they're slowly rebounding. But these are things you need to capitalize on. So let me show you what Medical Properties Trust is about. And I'm going to explain to you a little bit more in detail why Brookfield Real Assets Income Fund will be on my E-Trade dividend portfolio. But let's really talk about this stock first. So Medical Properties Trust owns hospitals in 33 United States, in 33 US states, 6 European countries, Australia, and South America. So 9 countries, okay, a total of 9 countries, 425 facilities. Okay, that's a lot. 44,000 licensed beds. So this is an international real estate investment trust. On their website, they really show you what their portfolio is about: long-term care, acute hospitals, freestanding urgent care facilities, behavioral health facilities, inpatient rehabilitation hospitals, and general acute care hospitals. So one thing I really want to discuss with you guys, and I don't like to be political or discuss things, but mental health is off the chain right now. And the value, in my honest opinion, the way people want to work through things, with the divorce rate being high, I do think the value of the family has gone down. People don't want to work, people just divorce, and it really affects the kids. And you're seeing a rise in people with personality disorders. So histrionic, borderline. So if you look in your Facebook and people are, doing duck face photos, craving for attention, chances are they may have a personality disorder. Again, I'm not a behavioral health specialist or a, physician or specialize in that. I'm more critical care as a nurse, but I'm going to tell you, there has been a huge rise in alcoholism. Patients I have taken care of are a lot younger. You can see the statistics out there. People are there's a rise in um, addiction. There is a rise in abuse, drug abuse. Um, 2014 was really bad with heroin. um, it's really sad. I mean, and sometimes you wish that people will improve. They'll improve their health and their ways, but people really don't want to change. So people go in and out of behavioral health facilities. And unfortunately, this trend is going to keep on continuing. And I always want to see people do well. I mean, I just want to see people improve in life. But, with social media, all this negative attention, how you have to live your life, all this stuff. I mean, a lot of us as dividend investors, we live the um, lifestyle that's frugal and against the norm. You know how people spendthrift, they're on all this debt. We're kind of against the crowd. So that's one thing that's different with us is dividend investors. There's obviously a rise in inpatient rehabilitation hospitals. People are getting sicker. The rise of diabetes, strokes, heart attacks, that's a lot higher. General acute care hospitals, that's another thing to discuss is, people are getting sicker across the world. People don't want to work, take care of themselves, and unfortunately, people are getting sicker. It takes an effort to improve your health. And unfortunately, people just don't want to do that now. And it's very sad to say this. And I don't like saying this, but unfortunately, the statistics, I'm like stuttering when I'm talking, and the numbers are going up. And you see all these articles on the rise of personality disorders and, all these people that need help. And unfortunately, there's going to be people in healthcare, with this COVID-19 pandemic that are going to need help. There's a rise in sales in wine, if you look at it, rise in booze. And unfortunately, when people are depressed, they drink and they need to be at a behavioral health facility. So, countries. So, look at this 221 in the United States, 82 in Germany, 85 in the United Kingdom, one in Portugal, one in Colombia, one in, or three, I'm sorry, three in Colombia, three in Spain, 17 in Switzerland, 11 in Australia, 8 in Italy. And then the United States, there's other states, okay, 19.1, 5.1% other, 4.1% Pennsylvania, 7.2% Massachusetts, 9.2 in Texas, 6.7 in California, and 6.2 in Utah. So looking at this, okay, this portfolio is very strong, okay? They are worth billions of dollars last time I checked, and they're only going to continue to improve. So if you go on their website, Medical Properties Trust, look at their strong portfolio that they have with all these buildings that they own. People are getting sicker. They need buildings. Okay, that's actually a pretty cool hospital. Looking at that, Ross Hall, I like the design and everything, but things are getting worse. People are getting sicker, and I encourage you guys to take care of yourselves, your health, because your health is the most important thing. You can make millions of dollars, you can make a lot of money as a dividend investor, but you need to really take care of yourself because look at all these medical bills. Right, increasing your chances of a stroke, increasing your chances of getting cancer. I mean, my pathophys class, it makes sense why people who are overweight and obese really get it bad with the cytokine storm with COVID-19, and how people that are overweight and obese increase their chances of getting cancer with the way the body reacts to stress and changes in the body. Your endocrine system gets bad and everything. Rise of diabetics, rise of heart disease, and everything. I don't want this to happen, but unfortunately, this trend is going on. So I have to think to myself, why would I buy a stock like this, a real estate investment trust? Well, first of all, it's $21.48. I'm going to show you its dividend history real quick, which makes it a very attractive stock. All right, so look at this 20 cents, 21 cents, 22 cents, 23, 24, 25, 26, 27, 28 cents with a 5.31% dividend yield. This is why I made one of the changes with Brookfield Real Assets Income Fund. Eventually, I'm going to add it back. I will be buying Brookfield Real Assets Income Fund again. I really like the um, dividend. I know that it's like $2. I'm sorry, not $2, but like a 2% expense ratio. But really, to get those monthly dividends in that stock, I think I'm going to throw it in my E-Trade dividend portfolio and get that rolling, as well as, and I'm waiting for RYLD to get on M1 Finance. I'm going to send them an email and figure out what's going on with that, because I really want to get RYLD, QYLD, and XYLD buying those monthly dividends so that I can start buying the quarterly dividend stocks. This stock is just going to increase over time. I'm very excited to see what this potential is in 15 to 20 years with it increasing its quarterly dividend. So this is a perfect stock to be long in. It is very important to be well diversified in your real estate investment trust portfolio, because look what happened when I was showed you in previous videos with rich uncles, how much money I lost, and and who knows what's going to happen with that money, because I went from $6,000, I could be down 4,000, but guess what? I got stocks like this that will increase their dividend, be very well diversified. I already made up for that money, so don't feel bad. It's a risk that we all take. This is pretty much a recession-proof stock. This is a pandemic-proof stock, because sick people are going to be here in these buildings. Okay, this is a stock that you should capitalize on. This is a beautiful stock with a increasing dividend yield. It is not jumping up too fast, so you can keep up with it with the money that you put in. Medical Properties, MPW, okay, $21.48. That is not bad at all. Okay, it'll be nice. You don't have to play catch up or throw a ton of money in it. And stocks like Agree Realty Corporation, once they start distributing these monthly dividends, I'll show you a video probably next week why I made these changes on my M1 Finance dividend portfolio. But I really wanted to show you why I added this stock to my M1 Finance dividend portfolio. I love the increasing dividends every year. I think it's a very strong stock to add to my dividend portfolio, and I believe it's one of the best REITs to buy. So I wouldn't buy stuff and lead you astray. I mean, I do these videos for you guys, and I believe that knowledge is power. This is a strong REIT that is going to increase its dividend. I feel very strong in the stock. I mean, I wouldn't make changes like this with Brookfield Real Assets Income Fund if I didn't find a stock like this. So it's always good to do your research. Again, I have a disclaimer in the video. Make sure you smash that like button. Make sure you subscribe and hit that notification bell so you don't miss future videos. I will see you in the comment section. You tell me what you think of this stock. I think this is a very hot stock, great stock to watch, strong stock, very good dividend yield. I think this is a hot REIT to buy right now. Do you tell me what you think of this stock? Check them out on their website before you make the call to buy the stock. I think there's strong potential with this one, and I'm gonna buy more. Okay, I'm excited. I actually added a little bit higher percentage to my REITs, because remember, I'm focusing on my REITs right now. Once I get to X amount of dollars, and then I'm gonna back off and start focusing on other sectors. But right now, this stock, okay, I love these dividends. I love these increasing dividends. This is one where I have to really think about this, because you got a 5% dividend yield, okay? Should I add this to a higher percentage? Should I put this out of a section and just buy it itself? There's a lot of decisions that you can make with this stock. I like this because it's going to increase its dividend. I think it's, like I said, I'm going to repeat myself. It's in demand, okay? As I said in my video, earlier, these buildings are in demand. There's a rise in mental health. It's going to get worse. I believe that the value of the family has gone down. People don't want to work. People just want to break up. And I believe that marriage is now almost like a contract, and there's a rise in prenups because of that. I do believe that people are getting married for the wrong reasons. It affects the kids, mental health, and all that. There's people that try to rescue people or people that want to be rescued that need some help, codependence, people that have attachment issues. Those are the people that need help, and unfortunately, it's only going to get worse because of social media and everything. So let me know what you think of this video. Again, I'm going to sum this up. One of the best REITs to buy, hot stock, increasing dividend, has not done well against the S&P, well diversified stock. I'm going to repeat this back and forth. Make sure if you're going to buy this that you're long in this, because these increasing dividends are very, very attractive. It's like a cent a year. It's only going to go up. I really believe that. I'm not a financial advisor, but you know what I'm talking about. Once you see those rise in those dividends over time, hot stock, it's not going to nosedive. If it does nosedive, you better buy it because the dividends will still be there. All right, you guys take care. Have a good one.